Split it.
All right. Hello, everybody. Welcome back to another episode of Finance Junkies. We got a lot to talk about. We had PayPal earnings, Disney earnings, ARM earnings, just a bunch of stuff that happened in the market today. But I think we got to start the discussion with this concept that I think everyone's been talking about are we getting too hot? Are we in a bubble? What's going on right now? I mean, I guess we'll just start it there. Chris, are we in a bubble? Is this market getting overblown? What are you thinking?
Before you answer, can I just ask you to define bubble?
Bubble meaning if you buy an equity right now, you are likely you can likely buy it 30% cheaper. Maybe the S&P pulls back 10%, but some individual names pull back 30%. I don't know if that's the best definition of a bubble, but
or are we talking like that right now valuations?
Like NVIDIA 700 is actually NVIDIA 550 in 3 months.
That's the question.
A lot of people are going to lose a lot of money.
How would you define bubble, Chris?
I'd say when you have over exuberance in specific industries. I mean, I don't think that there's such a thing as just a giant market bubble. I think there's certain industries that get overbought. Like even if you look at 2021, a lot of SaaS and tech names were the ones that got overbought, but there's plenty of companies that weren't overbought, right? So that's why if you look at Berkshire Hathaway versus ARK, who outperformed who, right? Because we were thinking, oh, Kathy Woods is the smartest person because she has crazy returns this year, but she was buying into the bubble. And Buffett was like, listen, I'm a more disciplined investor. I'm going to stick to the things that I know, and who outperformed who, So I think this is the time where there are valuations that don't necessarily make sense. But it depends on the sector, the industry, all the good stuff. And then there's others that there's actually some opportunity. So you want to, times like this, you want to cushion yourself with the more traditional names. Let the bubble stocks do their thing. I mean, you could speculate if you want. I think a lot of times people miss out on some great gains because they refuse to speculate. I know I've missed out on plenty of things because I refuse to speculate on things, but that's just the nature. If you can't sleep well at night, then it's probably not a good idea to invest in it. And that's how I approach my investing now. It's like, can I sleep well at night knowing that I'm investing in a company that could possibly be overvalued? And if I lose sleep over it, it's not worth it to me. That's all. When I was younger, it was a different story. I'd be like a lot more like, hey, let's roll the dice and see what happens. But now I'm more like, hey, let's be logical about things and go from there.
Mm-hmm. So are we in a bubble, Chris?
I think we are in the midst of a bubble that's getting bigger and bigger, but it's going to depend on how, bubbles can get pretty big before they pop, right? So a lot of times you can see the bubbles start to inflate. The question is, when is it going to deflate? And that's the hard part, right? So I think right now, when it comes to AI, there's a lot of companies that are in the AI atmosphere that are very bubblish, and they're getting a lot of valuation premium because everyone thinks that this is the future, and it probably is going to be the future. But in the short to medium term, there's just an over exaggeration in that specific space. So you just have to be cognizant of that and realize that, hey, you're playing a game of musical chairs in certain industries. And I think AI right now, the music is still playing. You're playing the game of musical chairs, and as long as the music keeps playing, you're fine. But when the music stops, you better know, and you better be the first one to get into that one of those chairs that's open. Otherwise, you're going to be left holding the bag.
And I think that's
Carlos,
great.
I was going to ask you, do you think we're in a bubble? Do you think this is bubblish?
I just want to start by saying I think that's a great analogy for it, because like as long as the music's playing, there's room for everybody. But when the music stops, there's only space for one. Like the space out, the way out is a lot tighter. So yeah, I agree with you. But I was when I saw the post, the title of the thing, I was really thinking about what does that actually mean? Is it a bubble? Every morning you post the index of markets, and the markets are in greed or extreme greed right now. So what it's telling me is that the people with the money need to invest right now because they need to show some kind of returns. They're not just passive investors. They need to be active. And I think to Chris's point, there are certain buzzwords or like buzz phrases like AI. There's certain industries that may be inflating. But for example, even if you say, okay, NVIDIA, Meta, Now, is it all new money that's going into those companies? When you're seeing something like Google tanking at the same time, is it really just a shuffling of money away from a horse that
Oh,
people
that's
think
a
is a
really
winner
interesting concept. That if Nvidia is going up, but
and
old tech
Google's
companies
going
are.
down,
I see what you're
right?
saying. I see what you're saying.
So
That's
can
I
you
never thought of it like that.
well, that's what made me think about it. Can you classify that as a bubble? If, for example, Tesla lost about $300 billion, it was it's at 500 billion right now. Okay,
Yeah.
money didn't just go on the sidelines. So if that money's coming out of Tesla and going into one of the other Mag 7, is it really a bubble, or is it just people moving around to say these horses are going to do better in the short term, and we're gonna sideline this guy because there's still a couple $1 trillion sitting on the sidelines. So I think you're only in a bubble when it seems like literally you could put 4 letters together and make 20% of your money in a few days. That's when I think it's a bubble. I do think that AI as a term is a bubble, because now you just say AI on your earnings call and people are like, oh my God. But I think you made this point, Amit, that at a certain point, markets are going to want to see that in the earnings.
Numbers.
If they don't see that in the earnings, then that extra little multiple gets cut out. So I want to say no, I don't think we're in a bubble. Long way of saying no, I don't think we're in a bubble. I'm Tom Lee on this one.
I think there's I'll tell you exactly where this bubblish situation is coming from. It's a combination of it's always the government. The government's the one that always fucks shit up.
Here we go.
It's always the government that fucks shit up. So I let's just start where this is coming from. The first and foremost thing is just it starts off with the big 7, right? Like the Magnificent 7, whatever you want to call them. But among the Magnificent 7, yeah, whatever. Like sometimes some people include Tesla, some people don't. Whatever, I don't care. I think the 4 major players right now, they are the ones that are inflating this bubble, but they're doing it because of how the government has actually approached things. So let me explain. Right now, who are the largest customers of NVIDIA GPUs? It's
the big
Meta,
Microsoft,
Google, and Amazon, right? With the exception of Meta, who doesn't really have a big cloud platform. They just use all the processing internally and then doing open source with it. You've got the rest of these guys basically buying up all these GPUs. And the question that everyone should be asking is why? Are they doing it so that they can improve their own stuff, operational efficiency, or is it something else? And the thing is, I'm following this along from another perspective in that these guys are heavily investing in startups, like AI startups. If you notice the trend, Google, Amazon, Microsoft, everyone is either throwing their money behind OpenAI, Anthropic, blah, 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 blah. But the thing is, no real money is actually moving from hand to hand. I don't know if you guys know that. Most of this stuff.
But okay, so you're saying they just purchase orders?
Pretty much. I mean, it's credits, right? So you give an example of OpenAI, right? OpenAI, why are they worth what they're worth? It's not that they're generating money. I mean, I'm sure that people paying the subscriptions to Copilot now is generating some money, but for the most part, you're seeing like what did Microsoft do for OpenAI? They gave them Azure credits, right? They're like, oh, here's some Azure credits, and now your valuation is X because we gave you these Azure credits, which is like pretty much compute. Right,
monopoly money. It's right. It's cash back, 5% cash.
Right back. Now, what do they get in return? They get a part ownership of OpenAI. Right.
Mm-hmm.
So the thing is, the valuation of OpenAI all is dependent on this magic money that they're getting. So basically, right now, this is happening in the background, and one of the reasons why it's happening is the government is not letting them do any M&A. If you notice that, right? Where right now Amazon couldn't even buy was not Activision. What was it? A few companies. Like it's the stupidest thing where they're like, oh no, that's like not fair competition. So these guys are sitting on a fuck ton of money. These businesses are generating cash flow. So they have one of 3 options. They can either do M&A, which is they can't do because the government is closing that door. They can't really do a shit ton of buybacks because they're buyback the shit. They already do max buybacks anyway. Mm-hmm. Right. And then last but not least is invest in their own selves, but they're at dinosaur level. So there's really not a lot of places where they can even park their money. So what they're doing is they're essentially building the cloud business, AI cloud, and then at the same time offering all these credits to these startups. And I think when these startups start to fail, because that's how the startup nature works, what 90%, 99% of startups fail, all of that equity is just going to be drained away. And that's when people will realize that, hey, maybe this is not the right way to generate this revenue. And I think that's going to impact Google, Amazon, Microsoft, whatever. And they'll say, oh, you know what? We need to cut back on technology capex because there's not a lot of startups now in the space. So what happens is, as long as there's fire under AI, everyone is throwing money behind all these AI startups. But the minute those AI startups go belly up, all Google, Microsoft, Amazon, they have to go back to growing at the normal pace again when it comes to cloud compute, which is based on the enterprise. And I just don't know when that's going to happen, but I think it happens eventually. And I think that's the point, that we just have to be a little bit cognizant of that. And I would say that would be the key, the musical chairs that I just said. Watch these big guys like a hawk. The minute the iota of any sort of like issue with these startups in the AI space, if any issues come around them, or if Microsoft, Google, Amazon, so on and so forth, they even remotely indicate that they are going to be even like lowering some of their technology spend, get the fuck out of some of these names, dude, because they're the ones that are going to be most impacted, whether that be NVIDIA, SMCI, AMD, all of them will be impacted. So that would be my trigger point.
Yeah, but can you make the argument that say the investment in these GPUs is the same as, say, Tesla building a gigafactory? They're one-time charges that you did, one-time hits on your capex that you expect to then monetize for several years. So I don't think anyone's expecting these tech companies to be buying, say, this much hardware at these levels consistently over the next couple of years. You recognize that there's a cycle for these things, and maybe every 4 years you expect.
Well, that's the point. That's the same thing. I mean, that's what happened with crypto and NVIDIA, right? I mean, while crypto was running, NVIDIA was doing well because everyone was buying the GPUs, right? Yeah. The minute that crypto went down, everyone's like, oh, maybe we don't need as many GPUs. And so now you had an overcapacity of GPUs. And so NVIDIA had to sell through all the stuff that they had, right? So I would say this is where the growth expectations for some of these companies is already baked in way out into the future. That, oh, this is not going to slow down. And right now, because the news is always so positive, especially this earnings call where everyone was like, oh, we're investing more in GPUs, we're investing more in data centers, blah, blah, blah. I think that gave a lot of people reason to invest heavily into companies like NVIDIA and SMCI and everything else. But the same holds true in the opposite end. When these companies start to cut back, these guys will be the first ones to be impacted. And the thing is, those future growth numbers that everyone likes to model out saying, oh, NVIDIA is going to grow at 50% or 70% year over year for the next 200 years. All those projections are going to come crashing down. So, and I think that's the same thing with SMCI. I think, though, I will say one thing, NVIDIA is not the one that I would ever short because they do have a lot of IP, a lot of software products, and a lot of service revenue that they can latch on to outside of what's going on with the cloud providers. So I would just say NVIDIA is not the one you want to short. The one that you do want to short is anyone in the space that is technically like an AI hardware company, but doesn't exactly do AI hardware outside of maybe just some peripheral stuff. So a company like SMCI, right? I was telling you guys, SMCI is a great buy when it was in the 90s. But I'm also the guy telling you, like, hey, right now the valuation looks kind of stretched, especially for an AI hardware company that has no real moat, other than some of the quality stuff, I suppose. That's about it.
What do you think of this theory? Okay, a couple of years back, I mean, look, these companies are all in competition with each other, and they will take whatever even slight competitive advantage that they can get over the other. And Meta was known for doing this, where they essentially overhired, and they didn't hire because they needed those people. They hired because we just want to have you on our payroll and not have you working for the other guys. What do you think of the same thing happening, say, with the allocation of the hardware? Understanding that there's a finite amount of GPUs that they can make in a year, and if you have a massive order, you are, in a sense, loading your bags as a hedge to have a competitive advantage over the other person. If you now know, if you're a tech company, right, you're a CTO, and you know that you've reached a point now where you can actually throw money at the problem. And it's not even about hiring a person. It's literally, if we have more compute than they do, we're winning, right?
Yeah.
What do you think of that
No,
That's a possible.
dude, there's definitely an AI hardware arms race. I mean, you can't deny that. You can't deny that.
And
Yeah.
there's only so many to go around, and they say, well, we're just gonna. I don't even know what we're gonna do with it yet, but we do know that having more than them is better. And then in the same
I
way
think
that and to your point, in the same way that when you fire those employees, it looks good. Wall Street rewards that because they understand that you're not going to be expending that capital. If once they stop the spend on the technology, Wall Street might actually punish them.
this is like I don't know if you guys know the King and the Onion story. Do you know the story behind that? It's like an Indian folk tale. Maybe you know it, Amit.
The King and the Onion.
Okay, yeah, I'll just quickly just say it. So one day the king wakes up and says, "Man, I really like onions." Right? So what does everyone do? Everyone in the kingdom just starts planting freaking onions. And the king is so happy, but then he loses his taste for onions, and then everyone loses their money. So the next day the king wakes up and says, "I really love potatoes." And so everyone starts to plant potatoes. And the king's like, "I really love these," but then he gets tired of them and everyone loses their money. And I think this is the oldest tale of time where you always have these manias. They come around, oh, everyone loves tulips. Everyone loves the .com. Everyone thinks it's the future. And then what happens? Just a lot of people left with a bunch of onions. Yeah. So it's just one of those things that while you're in a bubble, it's really hard to say you're in a bubble. You just think that, oh, this is the future. This is the future. Remember when Zoom was the future? Like everyone was just going to communicate over Zoom forever. And the thing is, if you try to disagree with anyone right now, you'll get swatted down. You don't think AI is the future? You're stupid. Oh, okay. Hey, listen, I think AI is the future. It's just not everyone is going to be a winner. Not like it's just how it is. So
okay, so let's talk about the move you made today, Chris, because I actually think it's not the worst move, and I think it makes sense if you do believe things are getting hype. You just bought some puts, nothing that crazy on Palantir. July, $21. Basically, you think Palantir at 23.50 is getting crazy. Is it kind of the same? Because calling the top of a bubble is something a lot of people have tried to do, and it's been very hard. Michael Burry did it once in 2008, right? And that wasn't really a bubble, but more mortgage crisis, all that stuff, and he was able to do it effectively. If you're right,
to be fair, that was an actual bubble.
Well, yeah, that's what I mean. Not really stock.
That's like a textbook definition of a bubble back then.
Right, in the housing market, right. My thing here is, Chris, is like, is Palantir in a bubble with SMCI, and not just Palantir, but I mean, like, how are you assessing that this is getting too much? Is it just, it's so easy to make money? You're up 40% in 2 days. Like, is that the gauge you're having? Because a lot of people are texting how easy it feels to make money in the stock market, which feels kind of like bubble.
I mean, okay, so let me take one step back and give some reasoning why I made the move that I made. So number one, let me ask you, Amit, did you buy any Palantir today?
I bought like 10 shares as a joke on the stream. Yeah, but that's
okay.
Yeah.
Why didn't you buy like 200 shares? Now, don't you think that this is the future?
Not at this valuation right now. No.
So if you, the average investor, can make that determination that, hey, listen, I think the valuation's a little stretched. You don't think these big guys on the sidelines, they're assessing the same thing? You look at the price targets. The price targets it's already gone beyond what the price targets are. Yeah. So there's not a lot of alpha to be left for the future. So if you're buying right now, you're buying basically a lot of risk with a lot less upside than you would some other names. So number one, I think that there's going to be some profit taking, right? So the profit taking will drag it back down a little bit. And then on top of it, you also have a market that's kind of toppy, and it's been toppy for the last month. And if you look at how the market works, the toppiness doesn't stay like that forever. It usually dissipates. So you've got two types of tops. You've got either that V-shaped quick downturn, right? Where basically like the Fed comes in and does some shit, or you've got this persistence of toppiness for like probably a month and a half to 2 months, and then it just comes down again. So my thing is right now, the macro is overbought, the company's overbought. So it's a two-way street for me. The put options were a bit expensive, but I sold some puts on Palantir for 17, which actually brought my cost basis down significantly. So I did it as a spread. I didn't just do a naked put. I mean, like not naked put, I wouldn't say. So, it got me a pretty good discount. So I think my cost basis is like $1.10 or $1.25, whatever. So the point is, I think in the next few months, and look, I have these all the way to July. Okay. So I have one more earnings. Maybe next earnings, things shit the bed. My goal for this one is purely just a trade. When I see a company go up 40% with basically okay earnings, Because I mean, yes, their earnings were good, but they weren't like, oh my God, earnings.
It wasn't Nvidia type of numbers or anything like nothing crazy.
Yeah. So I think that there's going to be a retracement. And when it does retrace, I'll sell these things for a nice, healthy profit.
So if it let's say it goes back to 16, how much are your spreads worth in like 2 months? Like what's the alpha on the $5,000?
I mean, it's like 5x. I'd end up doing 500%.
Wait, hold on. So you put in $5,000. If it goes back to 16 from 24, 23 right now.
Okay, so once again, I did it as a spread.
I know,
so
that's what I'm trying to figure out. How
right.
how you...
Right. So basically, what is the spread price between 21 and 16? What is that?
Well, you mean 23 and you're just right.
Yeah.
Five.
Right. So if I pay $1 something for it, it'd be like a 4x return roughly.
Oh, so you basically did a call debit spread, but going the other way on the downside.
Yeah, exactly.
Interesting.
Yeah. So we'll see what happens. And if I lose, I lose. That's just how shit works, man. But
AMIT's gambler.
Yeah. Like,
I'm like, oh, this is interesting.
I mean, I could do this on the in the other.
I'm like, wait a second. I've been doing this on the upside. You're saying this could happen on the downside? We can ride it down? Oh, boy. That's hilarious.
Part of the problem I have with this is we don't all agree on the terminology. So when you say it's something in a bubble, that might mean different things to different people. When we say bubble, I think The Big Short. I think, oh, that's a housing crisis type situation where clearly this whole thing is going to come down. I see a bubble as something that is a house of cards that needs very little to go wrong to create a cascade effect of failure, right? But I think what you're talking about is just simply overbought.
Mm-hmm.
So are there some companies that are overbought? Yes. Are there some sectors that are overbought? Yes. But do I think we're in a bubble? No, because
I mean,
this is what markets need to do. Money needs to move around. And I think these guys with this much money are happy and willing to play this game of musical chairs because they understand that if they play it right, or if they're a little bit cautious, or certain things like stop losses, you can make some money. And they need to justify every 4 quarters. They need to show returns as well. So
what do you think Palantir's price to sales is right now?
Dude, I haven't checked in a while, but it's what, like 22 or something? It was 15 before
27. 27. Its price to sales is 27. Okay. In an industry that even at the like a good amount you would consider overpriced. And what do you think the RSI is at the same time on Palantir?
It's like 79, 80, something like that.
Yep. It just crossed 70 something right now. So, and the MACD is starting to kind of, I mean, the MACD indicator has not hit yet. I think the momentum is still behind Palantir, but I think it's going to flip within the next week. So I'm not trying to.
Okay, here's my question. What if Palantir goes to 27 in the next, do you just double down on these puts, or like, how do you?
No, I'm not going to do anything with them. Just let them do its thing. I have until July, man. I bought some time, so I'm not worried.
But is there any world in which you think you're wrong on this and like Palantir actually?
I could be. No, I could be wrong. I mean, listen, this half of what investing is you could be wrong, but I'm trying to be logical and reasoned behind what I do. That's the logic and reason that I'm seeing. It's a little bit overbought right now. It's ran up 40% in 48 hours. That means it's ran up 1% almost 1% per hour. Come on, guys. Like, help me out here.
Like before I came on, I caught that video on X where it was like the only Palantir video you need. Like you guys were literally cheering as it went up 1%, 6%, 7%.
Yeah.
I'm like that.
No, that was PayPal. That was
PayPal.
Oh, that was today as it was dropping. Oh, okay.
Yeah, that was PayPal.
Same sort of deal.
Yeah. Okay. Do you want to talk Disney we'll wait till Steve gets here for PayPal. He might make it. He might not, but we should definitely talk Disney. So let's just watch this one clip with Bob Iger for a minute. Disney crushed on earnings. They're up 7%. The biggest things they invested into Epic Games. Let's hear him talk, and then we'll talk.
Did he tell Elon to go fuck himself?
What?
He did it in Mickey Mouse voice. Elon, go fuck yourself.
All right, here we go.
And I understand you have a big announcement that you're going to break on our air of a new strategic investment and partnership you're making.
Yes, we've entered into a strategic relationship with Epic Games, the maker of Fortnite, to not only invest in the company Epic, we took a minority stake, $1.5 $500 million investment, but we're also creating with them a huge Disney universe that will be for gaming and for play and for watching and even for shopping, for digital goods and maybe ultimately physical goods that will live alongside Fortnite, but be completely interconnected with Fortnite. And this represents probably our biggest foray into the game space ever, which I think is not only timely, but an important step when you look at the demographic trends and you look at where Gen Alpha and Gen Z and even millennials are spending their time in media. It's pretty dramatic in terms of the amount of time spent in games. In fact, almost equal to, in some demographics, or equal to or greater than how people are spending their time on movies and television.
Chris, you used to be investing in Disney. I didn't think this $1.5 billion partnership was that crazy, but the street loved it. Why do you think the stock's up, and do you think Disney's turning a corner now?
I mean, Disney's IP has always been strong. Everyone knows that they can monetize. There's multiple ways that they can monetize it. When I did my due diligence on Disney, it seemed like a very undervalued company, and it really is an undervalued company. But you know, I just I don't find the mission appealing, right? And by the way, I don't necessarily think that the growth story is going to return overnight. You know, some of the revenue numbers and everything else, these are structural numbers that are a tailwind behind Disney. That was easy. But I don't know. I think there is a culture war that Disney is on the other side of that I'm not in agreement with. And you know, I sold my position at a loss, knowing that I could, you know, could probably have made money on it, but I don't care. Like some things are worth more than the return. And you know what? I don't regret it one bit, because that is what gave me the capital to dive headfirst into Verizon. So whatever, I made way more money in Verizon, so I'm happy. I don't care.
Carlos, you thought this deal was good, or
I honestly wasn't paying too much attention to Disney today. I was a little bit busy. But I think that with as much pushback as you see in the direction that Disney is going, they don't seem to be stopping. And as a matter of fact, they seem to be doubling down, which tells me that somewhere or somehow behind the scenes, I do think that they believe that this will be a winning strategy for them long term.
do you think this new streaming thing, Chris, did you catch that they're coming up with, where they're like making this new bundle service with Discovery and the other company? Does that make sense to you? Or
I mean, all the losers are getting together and saying, "Hey, listen, if we don't get together."
I wanted to hear something more about a partnership, honestly, with Apple and the Vision Pro. That's what I'm starting to wait for. I want to see some of that show up on these earnings calls where these companies talk about specific strategic partnerships, and I'm not hearing anything about it. So that was something that was a little disappointing.
yeah, here's Bob Iger talking about that bundle partnership, and we can get some of his thoughts. But that thing to me was very confusing, because I don't know what it's going to turn into, but here's how he justified it, and the street liked it as well.
Other big news, which you announced yesterday, this joint venture with Warner Brothers Discovery and with Fox to create new streaming skinny bundle of your linear sports assets. Why does it make sense to do this? Are you at all concerned that this could drive accelerated cord cutting or even challenge and cannibalize your Hulu with live TV business?
Look, I think if you're a sports fan, if you're a sports league, if you're an advertiser, even if you're a distributor, you want to engage with ESPN in some form. ESPN has always made a promise to sports fans that it will serve them wherever they are, whenever they want. This is clear, and they've done a great job doing that. I think one of the secrets to their success, not a secret, is that they serve the sports fan so well. This is a big step in that direction, to serve the sports fan that has not signed up for the multi-channel linear TV, or that maybe was disenfranchised and didn't want it. This is a way to do that. We've watched for years the decline of basically the linear bundle on cable and satellite. And we've been preparing for a world where that business is not as strong as it used to be. Launching Disney Plus is an example of that, the investments we've made in content, the Fox acquisition, what that did in terms of our ownership of Hulu. All of these things are prepared for us to pivot as well as the world changes, as the world is disrupted. And by the way, I'd rather be a disruptor than to be disrupted. the linear business is still a business that serves us well in that it's profitable for us, and we intend to continue to be in it. We're investing in it in terms of the channels that we own, running them more efficiently, but we're still in that business. But we also have to be mindful of where the consumer is now and where the consumer is going.
But if this,
Do you think this makes sense at all?
It does. I mean, we're talking about it in the chat. We're basically right back to the cable TV model. It was genius. That's what they're doing. They're basically saying, like someone in the chat was saying, here, Jimbo Slice, to watch every Red Sox game last year, I need cable, Apple TV, HBO Max. You know, this cord cutting, they essentially made it incredibly inconvenient for people in the way that it was convenient when people first started doing it. And now you're right back to where you are. If you want to watch sports, now you need to have a bundle. And that's what they're doing. They're basically just bundling it all back together. And I'd say that we're at price parity, if not probably paying more than we ever were when we were just on cable. So the joke's on us. They won.
Yeah. I don't know if this is going to sell, dude, but these subscriptions are getting annoying at this point. There's a lot.
I can't tell you. Like, look, and I work in the business, but if you're like, oh, what is give me a one of the most popular titles on Universal or Paramount or this, it's like, who even knows these things? You know, you just say, well, I just got to get them all.
Yeah.
Do you know what's a bigger kick in the teeth?
What?
Now they're fucking charging you and making you watch the ads anyway.
Yeah.
And it's like, oh, I don't want to watch the ads. Okay, you got to pay even more. It's like, what the F, man? Come on. Like,
I wonder if the TV business will ever go the way Microsoft did. Did you see that announcement that Microsoft is now opening up certain one of their exclusive titles to be cross-platform?
Microsoft has a title?
Well, like Xbox. So like there's games.
Oh, the game.
On Xbox, and you say, yo, I'm an Xbox, like Halo or something. I read somewhere that they're opening that up now and saying, fuck it. There's hey, if people want to play it on PlayStation, let's do that. I wonder if that's eventually where we're just going to go. Like, you just cannot possibly have all these different streaming services with all their different, all the different content. And at some point, it just needs to be like, let's just pay Apple. I mean, really, let's just pay Apple a subscription service every month and give us access to all of the apps that are available for it, which is essentially the cable TV model. I think something like that would be better. And then everyone just gets their cut of the subscription model. That's it. The same way that it happens on cable TV right now.
What do you guys think about this story? This story was really interesting. Adam Newman is trying to buy back WeWork.
Yeah, I read about that.
This is the guy who went from 46 billion to basically zero with him. He got $1 billion to leave in his severance package, and now the company's worth like, I don't know, 20 million, 30 million.
Okay, here's a question. Here's a question before you guys really go into it. Why did WeWork fail?
Well, yeah, I think it was valued as a tech company, but it was a real estate company. That's why it failed.
Well, I think ultimately it wasn't. I don't think it was an effective business model. I just think ultimately it sounded great, but were there really that many people that wanted to essentially cohabitate a space with people? It sounded great because it sounds a lot like the experience that people describe when they work at these big tech companies. A big open sort of area. But I don't know that was. I don't know if there was enough people that actually wanted that. Like, were they really solving a problem?
Yes, they were solving plenty of problems. It was actually one of the best run businesses, if you really think about it. I know that he was really eccentric, but y'all forgot about COVID? Am I the only one that remembers COVID?
Oh, yeah.
What, you're saying that
Right?
COVID killed it?
Yeah, easily. So the entire business model is very simple, okay? It's not a model that you can't replicate either. There's plenty of companies right now that do the same thing. Industrious, there's like so many. Like, the thing about WeWork was that they were able to get scaled a lot. What they did was they signed leases. Essentially, the business model failed because they signed long-term leases with buildings, right? It says, like, hey, listen, I want a 5-year or 10-year lease for this office building. And so they would get that office building, make it nice, do it up real nice. And then they would do short-term leases with small clients. Like, let's say you, Amit, you want to have an office in Manhattan.
Bring your bricks into any one of our suites.
Right. So you want an office in the city, right? Now, the thing is, you don't want to go and try to sign a 20-year contract with some real estate developer. You want it for maybe a year or two, right? Or maybe even 6 months at a time. And maybe you have multiple locations you want to do business out of. So what WeWork did was say, look, we have places across the world, not just in the US, but across the world. And so we will give you access to this system if you pay us a subscription model, which is what we were just talking about. And it was actually good. It would work. The two main problems that WeWork had was, number one, they overpaid for their leases, which, by the way, I don't think that they really overpaid that much. So number one is that. And number two, they got hit by COVID. Which office buildings right now are like in the greatest of shapes? Which offices are occupied 100% right now? So I don't think that this is all on just Adam Neumann. I know a lot of people want to demonize the guy, like, oh, Adam Neumann's the fuck up. He fucked things up. But dude, they tried to IPO post-COVID. When did they try to IPO? Go ahead, tell me.
2019.
They didn't IPO 2019.
No. Actually, they put their S1 in 2019 in July, but their accounting was ridiculous, and that's when they failed. But then I think they tried in 2021 again.
Right, exactly. So that's the whole thing. Their entire business model had these weird risks that were baked in, and there's really no moat other than the quality of business. But the good thing with WeWork was that they had enough scale where they actually had offices all over the country, which gave them a very unique value proposition. So if you go like to London, they didn't just have offices in like just the US. I'm talking about they had it in like different parts of the world, different parts of, even some of the most remote places. The problem is to manage everything is rough. And so unfortunately, WeWork, the business didn't work out. They got hit by COVID. They could have gone from unprofitable to profitable. Like look at Uber, right? When Uber came out, oh, Uber doesn't make a profit. They're losing money. They don't make money. Now what does Uber do? They make cash flow. When they first come out, they're rarely ever you see a startup profitable. So yeah, I just think that
do you remember how he got the $4 billion in funding, Adam Neumann?
Yeah, he went to what's his Mayoshi-san.
Masa-san. But do you remember this? Yeah. The story was he walked into a limo with Masa-san for 10 minutes, and Masa-san said, "Would you rather be smart or crazy?" And Adam Neumann was like, "Crazy." And he was like, "How big do you think WeWork can be?" And he was like, "It can be $1 billion business." And he was like, "Think bigger." He's like, "It'd be 10 billion." He's like, "Think bigger. It could be 100 billion." And then he was like, "Good." And then 10 minutes later, he writes him a check for $4 billion. Like, it was the most weirdest way you would get funding for something. Like, it was like a gut reaction from Masa-san.
Dude, you take a step back. That time the market was just stupid. Like everyone was just throwing money all over the place. That was it. So I don't think that Masa-san is stupid either. I think this business could have worked. I do know that somehow, like to some degree, they try to paint Adam Neumann as this crazy eccentric dude that like smokes weed all the time, that walks around barefoot, which he does, by the way. But which CEO it was like that too? Steve Jobs.
Elon Musk.
Steve Jobs, right?
Maybe they did.
CEOs. CEOs tend to be that. And yes, and some of the people are rightly saying lots of overspending. Totally agree with you. A lot of times when these companies first come out, they do a lot of overspending as well. By the way, whenever I see these movies come out with like docu series movies, all that stuff is highlighted and exaggerated for content, really. So right, they dramatize a lot of it. So I wouldn't necessarily just watch We Crashed, which is a dramatization of what happened, and say that is exactly why they failed, because Adam Neumann was crazy.
Right, it's like watching Social Network and thinking that that's exactly what went down at the beginning of Facebook.
Yeah, and it's the same thing with like a lot of them, man. Like which other, like the one with the new one that just came out. The one with the GameStop thing.
It was the Steve Jobs biography.
Dumb Money, right? Yeah. That was a ton of over exaggeration in that too, man. And they really tried to paint it as the good guy versus the bad guys. And the bad guys are these giant hedge fund people that can make a phone call. Like Ken Griffin's just this evil asshole waiting on the side, and Willie just wants to screw people over. And Vlad is just some pussy ass bitch who's like, yeah, let me turn off the buy button. Like that's not how it happens in the background.
Chris, Robinhood's next week. What do you think happens? Their earnings. Do you think they get fucked like PayPal? The market cap's 9 billion, 5 billion in cash. Do you think they get fucked, or do you think they come out on top? Kathy Wood bought another
I don't know.
120,000 shares today.
I don't know, dude. I don't know. I mean, crypto's had a good year, good quarter, so maybe they'll have a good quarter. I mean, these guys they make a lot of money on crypto from what I know. So we'll see. And not to mention, there is a lot of TJ is definitely giving them a crap ton of money. If I would send a private jet to take TJ around at this point. Do you guys see how much TJ buys and sells options on Robinhood?
Dude, he's got his own person. Like he has his own.
Does
From what I understand, yeah. I hop on some of his live streams, and I think he was telling us. I'm pretty sure it was Robinhood, where when he tries to put his problem is like, I want to buy 1,000 contracts of this, and he can't fill the orders fast enough, and so I think he has to get on the phone with somebody at Robinhood, and he has like his own liaison there, which I think he was talking about possibly moving to another brokerage, because that was literally his only issue. It was like sometimes the quantity, the size of the orders that he wants to push through won't go through. I am cautiously optimistic on Robinhood because, man, even me, I freaking hated the company. I did not like the way that they operated during the GME thing. But man, like I find it hard to nitpick the app itself. At the end of the day, that's their core product, is that app, and that app is just so well designed. And to Chris's point, like, they're making money on crypto. They make money whether you buy or sell, right? And no matter what the price is, you buy or sell, they're making money. So it's not necessarily like tied to the value of crypto. And that's just another vertical for them that is also just growing. So
they're also expanding in other markets now, right? Canada?
They're losing money right
UK.
now. You know?
Dude, the big thing for Robinhood is, and I've been talking to a lot of people over the past week, the Roth IRA 3% match, the 401k match, and then
people have like that. Yeah, I've even been thinking
1% brokerage match.
That's
There's a lot of people transferring. Vlad says they have more demand than they can handle. Like if you miss your appointment with one of the representatives, you're done for 3 weeks. Like they can't get back to you. I think they're going to blow the street away with assets under management numbers, and transaction revenues will go up. Crypto volumes were up 92% and 74% in October, November. December, we don't have the numbers, but December was a good month. And then it's just a question of, can they be gap profitable? I think it's going to be hard to be profitable because they're giving so much money away to get these customers on the platform. But then they lock them in for 5 years. You can't take away the money or else they'll take away your bonus. And a lot of people just love the app. So I think it's going to be okay. And it's been 22 months. It's been stuck between 6 and 9. I mean, it's 75% institutional flow. It seems like there's been an accumulation phase and it wants to finally break out. But fintech has had a tough spot, right?
Look at the short interest.
Short interest is like I think less than 6 or 7%. It's not a lot.
8%.
Yeah, which is not that crazy at all. How many shares outstanding? How many shares? Do you see it?
Let me see. Short interest and ratios.
They have 1 billion shares outstanding, I think. It has to be maybe a little less than that.
I would have thought that would have at least been double digits.
Yeah, they have 895 million. Okay, so they have 900 million shares outstanding. Institutions own about 570 million or 600 million. Let's call it that. I mean, I just think $10 is stupid. And then half of the market cap is cash. I don't think I know it's a fintech like PayPal, and people are kind of bearish fintech right now. SoFi shit the bed, even though their earnings were good. But I think Robinhood is one of the more undervalued fintechs.
They're a little bit different than SoFi. They might be in the same category, but they're not the same business model.
Look at this. We got someone in the chat who Dude, I talked to a lot of people over the past couple of weeks.
Yeah, I'm thinking the same thing. I've got this money sitting in M1, like a Roth IRA, and I'm like, why is it sitting there? Like if I just literally push a couple of buttons, I'm going to get 3% or whatever it is. Why wouldn't I take that? You tell me. If you're just sitting there throwing the money in the S&P 500 anyway, like what the fuck?
I messed up really bad, dude. I moved my Roth over from my regular Robinhood Roth to fucking SoFi. Worst decision.
When did you do this?
You moved
a while ago. Remember, I told you guys I moved over some of the stuff to actually try the Robinhood Invest app. Remember, I told you, like, I actually moved my shit. Horrible experience. So now I tried to change it back to Robinhood. People are like, nope, you got to wait at least 6 months before we allow you to come back. I was like, all right.
And SoFi didn't give you anything for that, right? Did they give you a bonus or anything? Or no? Damn, dude.
Like I said, I was thinking about, like I said, for me, it was a trial. I was like, okay, you know what? The one good thing is that the app is so shitty. I haven't sold anything.
Yeah. I couldn't find the sell button.
It's like, I want to sell this, but I can't because the app is so fucking shitty. You know, I Yeah.
Here's the thing about Robinhood for me, and I was talking about this on my stream today. This is a personal one for me because this is the first one I've done my own research from. KRIS didn't really help me with this one. Carlos didn't help me. Like, this is one where I fucking, stayed up the long nights and tried to like debate myself of like, am I getting this wrong? Is this like too obvious? And then I bought in heavy to the point where I'm still up, even though it fell from 13.50 to 10. I'm still up because I got in really cheap. And now the question is, can the sucker just go to 15, 16, maybe 20 by the end of the year and like validate my research here? So we'll see, dude. I want this one to be right even more for instead of the money. I want to be right on like Palantir. I think I've gotten right on the research. That story is to play out, but Robinhood is one of those unfound gems, I feel like. And if I get that right, that'll give me some more confidence.
Bitcoin is looking at you right now being like, hold my beer. Wait till fucking April when I get cut in half. Okay? I got you.
Wait,
bro.
so
I
mean,
got
they
you.
did 615 million in share buybacks.
Yeah, so here's the other thing. So what's his name? SBF bought 55 million shares back in July 2022. Then FTX collapsed, so the DOJ held those shares for like a year. And then Robinhood in July was like, all right, we'll buy them back for $11. And so they spent 665 million. They bought back 55 million shares. They reduced the float by 5%. They canceled a $500 million stock-based compensation award for the CEO, Vlad, and the chief creative officer, Baju Bahat, who's also a co-founder, because in the beginning of 2022 or beginning of 2023, they knew they needed to get GAAP profitable. And that
let me just show everyone that
Tesla,
line item.
According to Tesla, CEOs should not get paid anything.
Yes, exactly.
Vlad better work.
But it removed 35 million shares from the float. Like it really helped. And
so if you look in the cash flow statement,
you make that bigger. That's the bottom line of an eye chart right now.
Sorry.
There we go.
It's not me, man. There you go. So you can see here cash from investing. So I looked at this and I was like, net issuance of cash. I mean, of stock. So they were issuing stock before, but now they bought back 608 million. I mean, that makes sense now. Amit, that you mentioned that. Yeah. I mean, they're trending in the right direction, right? You always want to look at the trends. So they are trending in the right direction. I mean, still net income is negative, but
no. So they were profitable in Q2. And then in Q3, they had $100 million stupid regulatory fine they had to pay, or else they would have made another 19 million. They would have had 2 consecutive quarters of profits. So I think they might be profitable this quarter and blow the street away. I don't know how, if they're paying 1% match on all these customer deposits. Like, I don't know if they can inch it out. But here's the other thing, KRIS. Now on Robinhood, this, you have to pay 3 cents per every contract on the option.
Yeah.
They were paying that for the past 2 years. Now we pay that. That should make their overall costs much cheaper to just execute all these options and not have to eat those costs that we have to eat now as customers. So I think this can go well, but I thought PayPal would be okay too, and that was whatever. So
yeah, I tried watching that. That call was horrible. I don't know if you saw. I posted. Like, I'm sorry. I think they should.
Let's talk about it. Let's talk. Steve's gonna be on in 5 minutes to talk about it, but go ahead, Carlos. What were your thoughts?
All those fucking calls should be a live stream with a freaking chat. And it should be on YouTube. I'm sorry. I can't do the whole thing in 2024 sitting there listening to these guys like on a telephone call. I'm sorry. Once you've seen one like Enovix earnings calls, you're like, yeah, this is the way to do it. Even Palantir, you actually get to see the guy. Come on, man.
Yeah,
so boring.
Yeah, the actual call, and Steve was fired up. He'll be on in 5 minutes. He'll give us his thoughts. The actual call, the numbers were really good. They increased transaction margins, beat on revenue, beat on EPS. They're doing $5 billion of share buybacks. Numbers were actually phenomenal, quite frankly. The call was so disgusting. I mean, KRIS just didn't sound like he cared about PayPal. They had
this is why you need to see the guy. I'm sorry. Like, these earnings calls should be made an event that is equal to the importance that they have on the stock. It literally seems like they probably put more attention into a company's Zoom call than they do these earnings calls. Seriously. I would love to see them do a presentation with charts, charts, data, like, I don't know, make it exciting somehow. Give me something that we can then clip out and make it go viral. It's so silly. Some companies do it and I think it works to their advantage, but that's neither here nor there. The call was boring and it was a bit low energy.
KRIS, do you think PayPal is dead money for the next 6 months, or what do you think's happening?
I mean, give the guys some time to execute. And then also remember the layoffs, they're laying off 10% of their employees, which means that there's probably a lot of bloat that they can take out, which means all that money is going to drop to their bottom line. That's it.
Wait, so you think
What's
this
it
was
drop?
you think this was a reaction to the new CEO?
What do you mean? Like the drop?
Like the
No,
sentiment
it's just,
that the sentiment is a bit.
I mean, the sentiment is that their user growth is down. I mean, that's like the clearest indicator that they're in a more mature phase of their cycle. So they're going to value the company like a value
Right.
company, not a growth.
It's crazy because it's still like up there in the top 5 of the most like downloaded
Yeah.
fintechs.
Yeah, no, obviously. No, that it's just a matter of valuation, right? Like what PE would you give a company that's pretty much at this point a transaction business / fintech, whatever? What kind of multiple would you
Single
give it?
digits, probably single digits, and expect them
Right.
to aggressive buybacks or a dividend.
Right. And that's
Like,
what they're doing.
incentivize
They're
me to
doing
hold it, you know what I mean? Incentivize me to
Yeah.
hold your stock.
Right. So I think the buybacks will be one. They need to get some of their top line growth like reaccelerating. You know, they need to get more users on the platform. Whether they have to go into other markets or whatnot, that's another thing. So I think you have to give the CEO some time, man. You know, you can't. The guy can't just come in one. Like what? How long has he been at the helm? Like a couple of months, 1 quarter, barely.
Yeah, not even that.
You know, the first thing he did was just make sure he got all his lieutenants correctly. And that's what I'm doing right now as part of my duty, making sure that all the people that he put in place, that they know what they're doing. Where did they come from? What did they do? Like, are they the ones that help turn around a business? Because that's what the foremost job of a CEO is to put the right people in the right place. If he did that,
That's like probably
we'll see the
that is
tangible
literally
results.
their most important job.
Right. So you're not going to see the results instantly happen in 1 quarter. It's going to be a while, you know, probably a year, maybe even a year and a half. I mean, this is where you have to be a long-term investor. And remember, the company is making money and they're doing share buybacks, which, by the way, they increased to 5 billion, right? So they're buying back a good amount of their
7% of the company, dude. They're buying back. Like,
Yep.
That's
So,
my
remember
point. Chris. At what point does the lack of the you know, they're losing users, all that stuff. At what point does the street look at the actual tangible book value going up and just be like, this is stupid? You know, like this can't just
The
keep
street
staying
never
stuck
looks at that. It's always a narrative, man. You have to have a great narrative behind you. If you have a good narrative, people will pay 27 times your sales, like Palantir. And if you have a bad narrative, they won't pay. You know, it's just simple as that. Right now, the narrative behind PayPal is not great. So people are not giving them the extra premium. If they reaccelerate growth, they cut down on headcount and grow their bottom line and start buying back even more shares. I mean, their EPS numbers go up. Every analyst and the mother will come up and say, oh, yeah, this should be way higher. I mean, look at what happened to Meta, right? Fundamentally, Meta was a good business. All they had to do was just lay off a quarter of their staff. And the minute they did that, everything worked out well. So kind of the same thing here, in my opinion. So
Who
we'll see.
reports tomorrow?
I don't even know.
Who's reporting?
I don't think there's anything exciting tomorrow.
Like
I'll check. I'll check.
right,
Steve, what were your thoughts on PayPal?
Before you do, I think I got a jet. I got to do some stuff.
Okay,
with the
no worries.
band.
No worries.
All right, I'll see you later.
See you. Bye.
Bye.
Horrified.
Why?
Absolutely horrified. I mean, the numbers were so good. The guidance was fine. Alex KRIS is just, he needs to hire a PR firm. There were things in the transcript that were just should not have been there. I mean, he needs to come out with a big statement tomorrow. I mean, you guys listened to the earnings call, right? I mean, I know you did, man. Chris, did you listen to the earnings call?
Chris, you're muted.
Mute.
I listened to it via Amit's stream.
Okay. So I just want to read 3 quotes. Okay. The first one. The first is we really have to improve the value proposition for our consumers. So you're basically saying that you don't provide much value.
No. No. Don't say
therapist with this, dude.
Next. Yeah. And Mike, on the other part of your question, I guess what I'd say is we just are doing too many things. Not a smart thing to say. Next, we have not invested enough in creating a single platform that again slows us down when it comes to innovation. Why would you say these things?
Because
I mean,
they're the truth. They're the truth. That's the truth. What do you want, man?
You don't say that on your first conference call, run the company for 3 months.
No, that's perfect. You get that shit out the way.
No.
Okay, Steve, you know the story with the letters? Like the presidents, they leave the letters. You know what the thing is?
Yes, of course. The first time you freaking screw up, you blame me. The second time you screw up, you write the letter.
No. It's 3 letters, right? The first one is the first time you run into a problem, blame everything on me.
Yep.
Right? The second time it happens, once again, you blame it on me. So there's twice.
Third times you write a letter.
Start writing a letter,
yeah.
Right? And that's what's happening right now. He's used one of his letters already now. So he's probably going to have one more letter up his sleeve, but before the end of the year. And then he'll have to start writing another letter. But I don't think he'll ever have to get to that 3rd letter. So we'll see.
The numbers were so good. And this company is trading like a tobacco company. I think that's why I'm having such a hard problem with this, because I wanted to see him come out. And I'm not mad at what he said. I'm mad at how he delivered it, because he could have delivered the same message, but been enthusiastic and got the troops to rally behind him. Like at this point, the market obviously hated it. He needs to come out tomorrow and announce a very big buyback in addition to the other buybacks, because they have so much freaking cash. No reason for it to sit on the balance sheet. Come out and say the market misinterpreted what I said. We believe in the company. We're drawing a line in the sand.
I don't think he needs to explain anything, dude. I think he just needs to execute.
But Chris, you don't think he sounded uninspired on the call or anything? Or
that's what most conference calls are, bro. Everyone is uninspiring, all right? It's a conference call. It's not that big of a deal. As much as everyone wants to make it a big deal, it's not that big of a deal. Let the guy execute. Let's see what he does. Give him some time, man. You guys are treating this like a personality contest, and I think that's what the market is looking for. Oh, we're gonna do exceptionally well, like Alex Karp.
I knew it. And everyone's like going there, dude.
Everyone's like going there. And everyone's like, oh, buy the stock because Alex Karp is really fucking bullish, and like Badri was the same thing. Oh, we think we see the bottoms. Everyone's like, fuck it, let's go, let's buy end phase,
Wait, Badri said that? He said on the call.
No. He said that I think he said demand is starting to recover. I don't know. I have to look into it, but it was something where it was a little bit more upbeat on the future. And I think KRIS is like, there's no reason why we should be upbeat right now. Let us do our thing, and then they could be upbeat. So this is like kitchen sinking it a little bit.
So Steve, you called me irate at how KRIS performed. Chris basically just said you have no reason to be upset. Let him cook.
I got every reason to be upset.
No, but Chris just said most calls are boring, which Chris is right. Most calls are boring, technically. So why are you upset at KRIS for being boring?
Because there's a much better way to deliver this message, and the message he delivered, the market completely sold off a very good quarter and good guidance. They're acting like
so why just Steve, I don't mean to interrupt, but why are you taking this as a negative? It gives you an opportunity to buy at a discount, right? If you think the numbers were good, I am
still up, but here's the problem.
Right.
I am not inspired that this guy can lead the ship now.
Because he sounded
turn this around. This stock has been being down so much. These numbers from this fiscal year and the guidance should push this stock up. Instead, it's down 8% right now. I don't know that the market can turn its opinion around on this anymore.
But we both know that 8% is overreaction, dude. We both know that. It's just stupid.
Even if it's not an overreaction, who gives a shit? If you're bullish, do you think the numbers are trending in the right direction? Buy. Who gives a fuck? Right? Long term, this company is profitable. It's buying back shares. It's all you really need, right? Or you could go in and speculate on a company that's not really making shit of money.
Don't say it.
No, I'm not saying balance here. I'm not. They make money now. What the fuck?
I'll say I was seriously considering buying back my covered calls that I wrote tomorrow and splitting my PayPal position against SoFi and Palantir.
Chris, would you do that? Would you buy Palantir at $23.50, which is what Steve is thinking of doing, and sell PayPal at 58? And sell PayPal at 58.
I think I would at this point. I would think I would rather be in Palantir at 23 than PayPal at my cost average are like 57.50.
Get in Celsius. I'm saving you guys a shit ton.
Yo,
of
can
headaches. Get in
you? All
Celsius.
right, well, let's do 2 minutes on this. Why are you so bullish on Celsius? Give us a TLDR 2 minutes because you keep talking.
Peter Lynch. It's a Peter Lynch play, bro. It's Peter Lynch. All the numbers are trending in the right direction. I see the product getting sold out everywhere. It's good. Trust me, that's it. That's all there is to it. All right. I'll see you guys. I got to go on cash flow. Later.
Okay. Bye-bye. Steve, should we end the pod too?
I mean,
or do we just end up talking like we usually do?
I'm just like,
look, Chris has a good point. Why are you so upset at Alex KRIS for just being a regular?
Because he doesn't get another chance to make a first impression. He doesn't get another chance.
He technically gets 3 months to be on another earnings call. So
yeah, he does. But you know what? This could have been handled much better. Their PR department did not freaking go through this. He wasn't. I mean, there's just so many things. Like, Amit, I don't want. I'm not going to make generalizations. I don't want these types of statements made. If Anthony Noto was in charge, do you think this conference call would have went like this? No, not at all. Zuckerberg was in charge. You think this conference call would have went like this? No,
Brody. Nah.
not at all.
I mean, it makes you feel grateful for Carp, right?
So grateful for Carp. So grateful for Carp. I mean, I just don't understand why you would say all these different things. It doesn't make sense. Play up profitability. Play up all the things that you guys are going to do. Play up the fresh look. And instead of just saying that we're not going to guide out for the year, say that all the things that we're doing is going to make drastic improvements up and down the line. And we're only going to guide on a quarterly basis until we can fully gauge the results. Don't say it the way that they said it. The problem is this is a miscommunication, and I am worried that the fundamentals are not going to be able to shine through because the fundamentals haven't been able to shine through. Like, that's the biggest thing. If this stock was not on the trajectory it's on, I mean, the fundamentals have been there for the past year.
Do you think that tomorrow it recovers, or do you think it gets a hit down?
I don't know.
Dude, I really think this is over.
But do the algos just take control of it?
I really think this is oversold.
Do people have stop losses because they did it as an earnings play?
Oh yeah, there was definitely a lot of earnings play done. Yeah.
I don't know. Like, I'm not bearish on the company. I'm bearish on sentiment, and sometimes sentiment matters more.
I agree with everything you're saying. I just think 8% down is stupid when I looked at those numbers, and I think
the numbers are great.
The numbers are great. Like, that's why the first thing I called you, I was like, the numbers were good, right? And you said the numbers were great. I was like, okay, so I'm not the only one that thinks the numbers were good. Like,
they were great. They weren't good. They were great.
Yeah, so I think Chris is right, dude. If the numbers were good, now I'm not going to double down because, I mean, fuck it, we'll just let it play out. But I don't think it's something to be super scared of selling. But there will be people that sell and just get rid of it tomorrow.
Yeah, it's just frustrating. I think he could have went about it such a different way.
What do you think Robinhood's going to do in a week?
Who knows? I think that they're reporting at a bad time now.
I think they're reporting at a bad time, but I still think they're going to crush.
I think they could crush on numbers. I just think that who knows what's going to happen in the next week with regionals.
Dude, regionals are going to be fine. I feel like the market's looking for an excuse to pop this all-time high on the S&P 500. Like, maybe regionals are the excuse, and that's what collapses.
I don't know.
This is why I moved my TFC options to 2026, dude. I could have left them for 2025 and made more money, but I was like, if anything happens in 2024 with regionals, which I didn't think would happen, but now look at this shit, New York Community Bank. And I was like, I needed another year. I had to have another year on these.
Kathy bought a boatload of stuff.
Let's look at what Kathy bought. This is why I asked you about Robinhood. Kathy Wood bought another 100. Dude, I think she's bought close to $1 million in the past week. Like 100,000 in RKK. She bought more Ginkgo. She sold Zoom, sold DraftKings, sold Path. Then she bought another 17,000 at ARKW. Like, here's my thing, dude. I know we're not supposed to go off Kathy. I get it. But she's been buying a lot of Robinhood, like a ridiculous amount of Robinhood. And I think this is one of those that she's going to be right on given the valuation and how bad it is right now. I don't think this thing deserves to be a $10 stock. I really don't. But it's hard to use Kathy as the justification for like, oh, look, she's buying because
I'm not using it as justification. I'm just saying, look at what she bought today.
she bought a lot of fucking Robinhood.
Did you see her interview about Tesla today?
I have it. Let's actually play it. It's 4 minutes. Let's play this. Here's Kathy on.
I didn't see the only thing. I saw her 1:18 clip.
Okay, let's play it.
Let's talk about this magnificent run, big tech, innovation, volatility, and maybe if things are getting just a touch bubblicious. With us now live from ARK's Big Idea Summit 2024 in St. Petersburg, Florida, is ARK Invest CEO and CIO, Kathy Wood. Kathy, first time on Last Call. It's great to bump into you, literally bump into you in Arizona last week. Thanks for joining us. Some of your top holdings, thank you, have soared in the last 90 days. Shopify, Coinbase, UiPath, Block, all up more than 30%. Are you worried at all that certain parts of the market are starting to get, or maybe already are, a little bit stretched?
Well, if we're taking a look at the market, if you look at what happened last year, 7% of the index. Wait, let me think about this. I got to think about this, Brian. Most of the returns in the S&P 500 were the Magnificent Seven, or now people are calling them.
Dude, why is she doing a news thing and there's people talking behind her?
She's doing it from her summit.
That
Who knows?
That's so weird, dude. That's okay.
Magnificent Six. Some of those valuations are stretched, but if you think about that, most of the market did not rally last year. I think they were, most of the rest of the market was up only 7%. That's where the 7% number came from. And so we think, and we know from our own stocks, which mostly are not the Magnificent Six, that they have corrected tremendously. They're now starting to show earnings momentum and surprises on the upside, not just from revenue, but also earnings. And we think they have a long way to catch up. We are way below where we were at our peak. Now, maybe we shouldn't have been there, ARKK at 160, but down to 45. We think interest rates clobbered our style.
Yeah.
And we've paid our dues, and now earnings will and revenue growth will speak loudly.
Yeah.
Dude, this is the first time I heard her say maybe we shouldn't have been at the price RKK was at 160. And this is the first time I heard her say we paid our dues. That's wild. Like, she's admitting that we paid for it, now buy our stocks. Like, that's crazy. All right, we'll let her finish.
All the people there in the background, I think they must understand that, and anybody should understand that you're buying into stocks that can be very volatile. The knives have been out, as you've probably seen, people coming up, Morningstar, et cetera. They've come after you. But I would imagine your message to investors is we are investing in some companies that are going to boom wildly and become 10Xers. And there's other companies that may go away because these are the high-tech AI investments. I would imagine that is got to be a clear message to people watching and the people sitting behind you right there, Kathy.
Absolutely. Absolutely. We're saying that if you get on the right side of change, these companies will deliver super exponential growth. What does that mean? It means not only rapid growth sustained, but an acceleration in growth. For example, Tesla is going through a lull right now related to the cycle. But when autonomous taxi networks, platforms kick in, as we think they will within the next 2 years, I will say, then what we're talking about with Tesla is a reacceleration in growth and a huge increase in margins, because robo-taxi platforms are SaaS models, software as a service models. We have a lot of stories like that in our portfolio, and they are highly misunderstood.
Yeah, truly. And a company that...
You think she's right about Tesla?
I hope so.
You're so mad about PayPal, dude. You're so just like upset. You're not even down on your investment. Why are you this upset? It's not that bad.
Because the valuation of PayPal doesn't make any sense.
Okay, so buy more.
He didn't do us any favors. And I am worried that the perception is going to continue to beat this company down.
I actually am not worried about. I think the valuation is so stupid. Could it go lower? Yes. Do I think it's going back to the lows of 49, 48.50? No, I don't think so. I think it's going to be okay.
I don't care how low it goes. I'm more worried that at this point, it's not even going to trade at 15 or 20 times earnings again, or for a very long time.
Dude, Alex KRIS may not be the best speaker, but he took Intuit up 20x from 2004 to 2023, the stock. And he was a big guy in the company. He wasn't some middle employee.
I know. I'm familiar.
So he operates even if he doesn't speak as well. And I think, well, let him operate. Let him cook, right? Let him cook.
Hey, I got a great idea. You ready?
Depends on the idea.
Great. It's a great idea. And this would suck for me. Okay. But it's a great idea. PayPal should buy SoFi, make Noto the CEO, and move Alex KRIS to COO.
Are they allowed to buy a bank? I don't even think that's allowed, dude. You're so, like, this is the most unrealistic acquisition. You're so upset.
But still,
PayPal should buy SoFi.
Noto was in charge of this company. Be a different tune right now.
PayPal should buy SoFi.
PayPal should buy SoFi, put Noto as CEO, move Alex KRIS to COO.
How much would they buy for?
Who knows?
Like 10 billion, 15 billion?
I think they got $9 billion in cash on hand. They don't even have to touch treasuries, take on some debt. I don't know.
It's not the worst idea. I mean,
not the worst idea in the world.
I think we just got to give them time. They'll figure it out.
But
okay, let's talk about Palantir's run today. 23.50. You think we hold or no?
I don't know.
You sold some covered calls today. Obviously, you're thinking.
Dude, so the covered calls I sold yesterday at 31 cents were 47 cents today.
So you sold more today
at 47 cents a share. Yeah, 40 strike June 2021. I'm sorry, June 21st.
So there's people willing to pay you that premium because they really think Palantir is going to be 40 by June.
Dude,
crazy. What if it does, Steve? What if it actually goes to 40?
I'm going to have to roll. And I'll be up so much money on my position, I won't even be that mad.
Dude, $40 would make it an $80 billion company, and they're going to do $2.7 billion in revenue. That's going to be $1 billion in free cash flow. So $80 billion market cap, about $1 billion in free cash flow.
80 times free cash flow.
You said it like that's not an issue because you're just like,
I'm not saying it like it's not an issue. I'm just saying that Tesla trades 132 times free cash flow. So,
dude, I think Tesla is going to be one of the most exciting companies in the world. And I think right now everyone's mad at them, but I think this actually might be the dip opportunity. Meaning, I know how everyone's waiting for 150. I don't know if we actually see 150.
I'm waiting for one. I mean, I'm not waiting because I bought some Tesla today, but look, I could see Tesla going down to 125 or 100 again. But I think ultimately it's going to be much higher, and I can't predict the future. So I'm going to buy when I can.
Yeah.
It's like Alibaba. Like, I need to really go through the Alibaba thing, but that's another one that doesn't make any freaking sense.
They got hit. It doesn't make any sense. So I hope PayPal does not turn. Baba's been stuck for years now, but they're in China. The difference is PayPal,
Agreed. But Baba has no reason. Bring up a 5-year chart of PayPal, please. Or a 10-year chart. Like, it's disgusting.
Yeah, it's not.
It's under where it was 10 years ago, I believe.
So they went public in 2015 at 34 a share. They went up to 300 in 2021, 303 or whatever, 308. And now they're up $30 from where they were IPO'd at in 2015.
And that's not taken into consideration after hours.
Well, so they're up $25 from then.
I mean, do a 5-year chart. Like, this has fallen off a ledge, and not recovered, and it is lower than it was 5 years ago. And you look at the amount of revenue and net income and free cash flow they generated 5 years ago versus now. And I'm not saying that 325 should have ever been hit. Okay. What I'm saying is 63.24 today after these earnings, we should have seen a little bump. We shouldn't have seen an 8% sell off. That's what I'm saying. This is now, do the math. They guided for like $5.15 for non-GAAP EPS. They're trading at like 11 and a half times earnings.
It doesn't make sense. We know it doesn't make sense, dude.
They're trading where Verizon and Altria are trading, like that neighborhood.
All right, so let's double down tomorrow. Let's buy another.
But admit, that's the
shares.
problem. The fundamentals make a lot of sense and the numbers make a lot of sense, but the market already had a bad perception of this. The market already thought Apple's going to eat its lunch, Visa's coming to eat its lunch. Can this guy change the perception? Because he doesn't need to change the fundamentals. That's the problem. Like, do we feel comfortable with this guy being on the conference calls every quarter? And do we feel comfortable with this guy delivering the message? PayPal was not a story that needed to operate. They are operating. They're buying back $5 billion in shares. They bought back 4.7 this year or something like that. I mean, it's not like they're not operating. It's not like they're not profitable.
I think it'll be okay. I think we're all just upset. Even I was upset, but I've cooled down. I think we'll be all right, dude. I think we'll be all right. All right, I think that's it.
Doesn't make sense.
Doesn't make sense.
Doesn't make sense.
But it was fun. We had Palantir rally up to 2350. We'll see what happens tomorrow. I live stream.
The Palantir goes to 25 this week.
Well, tomorrow's a Thursday, so it has to overcome a Friday sell-off that tends to happen. No one bought. Kathy didn't buy today. People thought Kathy was buying. She did not buy.
Oh, she loaded up on freaking. What is this? Jason Calacanis?
Yeah, he mentioned Carp on the earnings call.
That's awesome.
I live streamed today for 9 hours and 21 minutes and 25 seconds.
Dude, you're iconic.
So that was fun. I might have to do it again if Palantir runs up 10% tomorrow.
Is there any way I can get the transcript from the Twitter Spaces? Is there a way to get that?
Yeah, I can get it to you. Yeah,
because I want to put some of Dan Ives' quotes in my article.
Oh yeah, 100%. I'll get it to you.
Awesome.
It was a fun day. It's a very good day, exciting day. A lot of good stuff. Fun streaming. Saw these companies do well, some of them, and I think the rest will be okay over the next couple months. I drank no Celsius today, dude. I had a Coke Zero. That got me through the day, but no, Celsius wouldn't help. Celsius is disgusting. Doesn't taste good.
Chris may be onto something. I mean, look.
No, I think Chris is right about Celsius.
They're good, but the short interest doesn't necessarily make sense.
Okay, let's talk about that later. We got to look at that. Steve, when are we doing our Starbucks episode of Valuation Nation?
I don't know. It's not tomorrow. I am booked with meetings all day.
I don't know, not tomorrow, but over the weekend we started a podcast and we did not follow through on.
I know.
We did 2 episodes, but we've been talking every day though, so it's technically,
Jesus.
All right. That's it. See you guys. Thank you for joining. We'll be back tomorrow, and yeah, we'll keep going from there. I'll be live tomorrow, 8:45 a.m. market open, and we'll keep doing what we got to do. All right. Bye, everyone. Have a good one. Good night.